Hello and welcome to Flagstaff TV. Today we are joined by Maurice Healy, who is the founder and CEO of Glantus Holdings. Maurice, thank you very much for joining us today.
Good afternoon, Catherine. Thank you for having me.
Thank you. And Maurice, congratulations on your successful IPO. Can you start by telling us how this listing has come about?
Yeah, I mean, we started the company in around 2014, and we started the work on the product around 15 and 16, and really took it to market in 2017. And we've grown unusually for a tech company. We were making money from the beginning, so a combination of debt and our own working capital allowed us to grow the business to where we were at the end of 2020. And at that point, we were still 85% owned by management. And the opportunity in front of us has grown considerably over the last 18 months, and it was time to bring in equity. And so we engaged with Arden about 18 months ago. We worked closely together over the last 18 months through the COVID pandemic, and we felt we were in the right place to go live this month.
Congratulations. And you held a webinar last night. What are the key takeaways from that?
The webinar was interesting, and we got some very interesting questions from the participants. So it was nice to have that interaction. I think there were three messages that we wanted to get across to investors and potential investors. One is that we have a proven technology, a proven product, and a proven market. We are in a situation where our technology has been tested to within an inch of its life, and has always come through. And then we've got just these large global organizations who are now coming to us and looking for the solution that we have to offer them. The second thing, I think, was to say to them that our revenue, 89% of our revenue is sticky, recurring revenue. So it's a really solid base. And as we grow that recurring revenue, the cost base doesn't go along with it. So it's a very profitable model and a very sticky model. And then I guess the last point to make to potential investors was the fact that the company is still owned 55% by management. And we are very keen and enthusiastic about what we're doing. And yes, it's great on the one hand to say, we have the best AP product out there, and that's nice. But we are driven by driving the value of our shares as a team for ourselves and also for the investors. And we have a very clear path to how we're going to do that. We're looking at the American markets. We're looking at the multiples that are being achieved by organizations like ourselves with our own IP, strong customer base, strong recurring revenues. And we have three ways of growing: by organically, with partnerships, and through acquisitions. And there's a big arbitrage between what we can buy at and what the ultimate exit values will be. So we're very clear on our path. We're very clear on how we will grow shareholder value over the coming years.
Maurice, thank you. And as a new member of the London Stock Exchange, what does this mean for Glantus going forwards?
Oh, it means an awful lot, Catherine, because we've got this customer base, this global customer base. We're talking about organizations who spend, not even their revenue, their spend is $1 billion or more. And they've suppliers numbering anything from 4,000 to 120,000. And we're right in there with them. And, the decision to go with an IPO as opposed to any other form of funding was based largely on the fact that with these large organizations, having the PLC badge means something. It means a lot. And the London Stock Exchange then is a brand in itself. So for these organizations, for us to have a PLC badge and to be on the London Stock Exchange, well, that makes life a lot easier for us, and it makes life a lot easier for our customers. So I think this is going to be a real boost for our business, being on the London Stock Exchange.
It certainly sounds like it. Maurice, thank you very much for your time today.
Thank you, Catherine.
And thank you for watching Flagstaff TV.